Hello everyone, I'm John with JP Strategic Investments, and today I'm going to talk about why we just started a position in Amazon stock and where we think the stock will go from here. We're also going to talk about how long we plan on holding the stock and all of the details that go along with that. So let's dive right in. So first of all, everybody knows that Amazon is a great company. I don't think I need to convince anybody of that. So what I'm going to specifically focus on here is why we think the stock will go up over the next 6 months to a year. So the first reason that we're investing in Amazon stock right now is because we think they're in a very unique position. Obviously, with rising COVID cases, many investors are being cautious because of the possibility of more lockdowns. So many investors, ourselves included, have started to trim their positions, consolidate, and stock up on a little cash. However, Amazon is in a unique position here because while the company is in one case a pandemic stock because they will benefit from more lockdowns and social distancing requirements, they are also nicely positioned to be successful even after the pandemic has subsided. This allows investors in Amazon to get exposure to what has so far been a rapid economic recovery while at the same time having little exposure to the risk of more lockdowns. The second main reason that we're bullish on Amazon over the next 6 months is the upcoming holiday season. Now, this benefits Amazon on two fronts. The first and most obvious reason is that in the current situation, the vast majority of holiday spending will occur online, including Black Friday sales, which would normally have a larger benefit to in-person retail stores. Historically, Amazon has dominated online holiday spending. What's even more important is that their best-selling items during the holidays are usually their own products, which is really good for Amazon because those items are generally their highest margin products. The second way that Amazon will benefit from a huge surge in online holiday shopping is through their AWS cloud business. Amazon's cloud computing business is the largest in the US with close to 33% market share by the latest estimates. AWS provides cloud computing to some of the largest companies in the US, including Netflix, Disney, Adobe, Facebook, and Twitter. With an expected surge in online shopping ahead, e-commerce companies as well as retailers who are shifting holiday shopping online will be doing a lot more spending on cloud services, and with AWS controlling the majority of the market, they will be the main beneficiary of this increased spending. This is also especially beneficial to Amazon because AWS is by far and away the most profitable segment of their business. The third reason that we're bullish on Amazon stock in the near term is that regardless of whether or not we get more lockdowns, there is also the possibility that we get another round of stimulus checks. This could be a huge benefit to Amazon, especially during the holiday season, as there are many people who don't necessarily need the extra money and will do some extra Christmas shopping with that money, most likely on Amazon. We believe that this, combined with the reasons that I've already mentioned, will lead to a blowout fourth quarter for Amazon. And speaking of the fourth quarter, we also believe that Amazon is sandbagging the guidance they gave in their most recent earnings report. They're projecting $112 to $121 billion in revenue and $1 billion to $4.5 billion in operating income in the fourth quarter. Now, based on the growth we've already seen from Prime Day as well as projections for online shopping, we believe that they will easily exceed the high end of their guidance on revenue. As far as operating income, one thing we have to keep in mind is that this guidance assumes roughly $4 billion in COVID-related costs. So really their guidance is $5 billion to $9.5 billion excluding the COVID-related costs. Although we believe they're being very cautious with the estimation of COVID costs. In the third quarter earnings call, they mentioned that in the third quarter, they roughly had $2 billion in COVID-related costs, and over the first 3 quarters of 2020 combined, they incurred a total of just over $7 billion in COVID-related costs. Now, while they will obviously have to buy more personal protection equipment for all of the drivers needed to deliver what will most likely be a record number of products in the fourth quarter, we believe that $4 billion is an overestimation. We have to remember that the highest costs related to COVID would have been the larger equipment related to making their fulfillment centers safe to operate, which most likely included plexiglass dividers, air filtration systems, sanitation equipment, thermometers, and a variety of other things. If the first 3 quarters of the year combined resulted in $7 billion of costs, which included these higher cost items, then it's hard to believe that in a single quarter they will spend more than half of that amount, even with the increased personnel and working hours. Finally, as I mentioned earlier, Amazon is poised to be successful even after the pandemic passes. E-commerce is not going away, and the cloud computing industry has huge growth potential ahead. Not to mention, Amazon is always looking for more opportunities to grow, like the pharmacy segment they just recently introduced. This gives us confidence that a successful vaccine and a decrease in COVID cases won't cause a large drop in the stock, unlike other stocks whose businesses might suffer as people begin to get back to their normal lives. So those are the main reasons we've started to buy Amazon stock and why we think the stock will have a nice run over the next 6 months to a year. As far as how much we're buying and where we think the stock will go, our current position is only about 4.5% of our portfolio. But if the stock drops to around the $3,000 level in the next couple of weeks, we'd consider adding to our position and making it about 7 to 8% of our portfolio. We believe that if the tailwinds I've just laid out pull through for Amazon, we think the stock could be approaching $3,600 per share within the next 6 months to a year. At this point, we would reevaluate our position and decide whether or not to sell or hold. We hope you found this analysis helpful, and if you did, please consider liking and subscribing for more stock analysis like this, and have a great day.